Good day everyone, I'm Jimmy, and if you're new to the channel, welcome. If you're not, thank you so much for supporting us all this while. Just remember that every like and subscribe goes a long way in supporting our production. Now that the stimulus checks are out, you must be wondering, what am I supposed to do with all this money? Well, before you click away or think this is some sort of video trying to sell you some stocks to buy, just give me 30 seconds to... Okay, just kidding. Now that I've got your attention, we're not going to promote any stocks like all the other videos would, but instead would point you towards the correct direction in this holy grail of investing, as we truly believe in educating more people with financial knowledge. A survey from Deutsche Bank, oh yes by the way, check out this book that exposes the staggering range of ethical and legal lapses, including money laundering, tax fraud, and sanctions violations. Not to mention the mysterious ties to former President Trump that has got federal investigators poking around. Anyway, the survey might have given us a rough estimate of how much cash from the US $1.9 trillion stimulus package might find its way into the stock market. Let me play devil's advocate as well, since Marcus is at the other side of this room recording this podcast. All this money can't really make a difference, right? Retail investors or traders can't possibly pump up the economy, considering the number of large cap companies out there and hedge funds, and let's not forget SPACs, with possibly billions of capital at their disposal. The responses to this survey come as a shock to us as well. More than half of 25 to 34-year-olds interviewed plan to spend 50% of their stimulus payments on stocks, and 18 to 24-year-olds involved in this survey plan to use 40% of any stimulus checks on stocks as well. Based on the calculations provided by Deutsche as well, if around $465 billion of the stimulus is given out as planned, approximately $170 billion will be dumped right into the stock market if you were to calculate with some conservative percentages of 40% from this collective group of interviewees. Say these people are irrational, inexperienced, and do not even have much capital to begin with. The survey further revealed that those 35 to 54-year-olds surveyed planned to use 37% of their checks on equity market investment, though those over 55 said they'll be vested 16% into stocks. Nevertheless, 170 billion would definitely be either a justified fair estimate or, if I may say, a severe underestimation of the amount of liquidity flowing into this market. It's like standing in the middle of the Three Gorges Dam in China as the dams burst open during the rainy season. Drowning would actually be an understatement. So, with so much money flowing into equities, how do you position yourself to gain the most out of this situation? Firstly, remember what type of investor you are. If you are a value investor, it will be second nature for you to refer to all those indicators to start accumulating some of those previously overweighted or undervalued equities. For all our Singapore viewers out there, there's this phrase called catching the falling durians. You gotta do your own due diligence. If you're a growth investor, looking to add equities in a rally might not be the wisest thing to do. Well, for all we know, the market has probably already slowly weighed in on this influx of hot money. Perhaps it's time to also reevaluate your portfolio to calculate the intrinsic value of your holdings. We've mentioned in our previous video on how to calculate the intrinsic value. If you're interested to know more, pause this video right now. Anyway, your conviction in your holdings is what matters at the end of the day. Secondly, it's paramount that you have a plan on how to make money out of this, which is kind of rhetorical. However, it might not be so common sense when there are so many blaring signals. Meme stocks to the moon, this stock, that stock, gaining over 30-40% overnight. It's important to not chase into the hype or at least know what you're doing according to your plan. Fail to plan, plan to fail. Lastly, this is probably one thing that everyone's going to look at us like fools, but keep some cash. Why? Everyone's going to look at us like, you telling me to keep cash in a bull run? Reason is rather simple, cause cash is king, period. Market tanks, open your treasure chest and start loading some orders according to your plan. Market goes sideways, use that cash to buy a Philips air fryer and fry some tendies while waiting for your stocks to pop. Market continues to rally, just take profit. Still not convinced? Let's take a look at what Michael Burry said, the chief of Scion Asset Management and featured in the famous Hollywood investing movie The Big Short, the man who needs no further introduction perhaps from the attention he's been getting from his recent gains on the blockbuster GME play. From his tweet, The data provided further backs the argument that the whole point of the stimulus checks being the most liquid form of asset class for people to purchase commodities for day-to-day consumption. That same basket of goods that your Econs 101 teacher might have taught you something along the lines of consumer price index and purchasing power parity that might or might not cause inflation in asset securities markets after all, which we'll leave that topic for another day, another video. However, should this be a self-fulfilling prophecy where the statistics presented above are a close enough estimate of the current situation, it's more apparent than ever that the asset markets is going to balloon even more to a scarier bubble. Well, if it ever does or even appears to be sure that we'll be covering more about the possible risk indicators and opinions on the market outlook as it goes. So turn on the notification alarm and subscribe to our channel if you haven't to get the latest updates. Well, we have come to the end of today's video. We hope that you enjoyed this short yet ominous content, and please invest safe.